Welcome to Momentum Monday. Today is February 27th, 2022. Howard, how are you currently positioned?
Well, I'm not a short seller, but obviously everything leans towards it's been a market for high cash, not high rubles, high cash futures. So it's what do we got Sunday night? Why is the futures down? He's threatening nukes or something?
Yeah, I guess something about the nukes. Yeah, futures down. Let's take a look at the charts. So bounce attempt on Thursday, and then this afternoon, like they're giving back like half of it, I guess.
Yeah, I mean, it's not going to be an easy market. Risk is off. Institutional money is not going to, unless the whites of their eyes are out there, institutional money with a war is, it's a good chance that we could have seen some kind of fear bottom. VIX hit close to 40 on, I don't know, Thursday maybe. Premiums are very high, but I don't know. Things are still massively overvalued, and I think the big question, Ivan, is do they use this war to maybe not raise rates and kick the can down the road? I mean, again, I don't know if that's a reason to just be super bullish. It just leads to inflation. But as much as the market sold off real estate, I don't know, in San Diego and Phoenix, it's just mayhem. People can't buy houses fast enough, and we've well surpassed the peak of 08 in terms of prices. And it's not like rates have shot up, so it's not like rates are at all-time lows.
Yeah, it's the same all over the world, really. It's not really a US or regional phenomenon. It's just all around the world. It's inflation, and that conflict that we currently have in Ukraine will only make things worse.
How close to Bulgaria is Ukraine? Not close.
It's very close, actually. It's very close.
Yeah.
It's right next to Romania, and Romania is in the north of Bulgaria.
It's a hop, skip, and a jump.
What?
It's a hop, skip, and a jump. So listen, you got a KGB lunatic. Well, not lunatic. He's just, who knows? He's playing KGB game, and he's always going to be KGB. And they hate the US. So, I don't think it's a time to bet the farm. The market's been warning us without the news of Russia. For all the people that did, there's a lot of smart people that just didn't think this would happen. So I got to think that has to get priced in over the next month or two. But that's a hell of a fear. What I noticed, Ivan, is that night, but there's so many new investors, and what do? It's the first bear market. They go watch the news and they panicked out. So I think what you have to do is trade against some of these lows in the tech stocks, and if the Qs are below, close below that 320-ish point, all bets are off. So if you want to trade against it tomorrow, you can trade against it. Like, at least you have a place to trade against this. I would stick with stocks that held their highs, like Cloudflare. I'm trying to think what other stocks have held their highs. But
all the cybersecurity names, by the way, are
not really. Zscaler imploded.
Yeah, other than Zscaler, but most of the others.
Yeah. But it was surprising to see Zscaler. I mean, I just can't follow how overvalued these are. But yeah, okay. So yeah, cybersecurity. US is going to pay a lot of money to these cybersecurity companies. Hack held up the best as an ETF, Northern LifeLock, but yeah, it's not cybersecurity. So go back to the Hack ETF.
Yeah.
So I mean, if we open up down, that may be something I trade against the 50 lows. That's probably one of my favorites. But you had Zscaler. Oh, that's interesting too. Hang on, what was that last one, Ive?
Wasn't it Hack? I don't remember.
No, it was the one after Hack that you pulled up. Oh, maybe that is it. Okay.
I don't know.
So, yeah, I mean, this looks like the strongest sector. So if we're going to bottom here, this is the leading sector, especially if we're not going to go to war with Russia. This is all going to be financial. I mean, the unintended consequences of them are terrible. So many Ukrainian engineers being hired by US companies, and they're not going to be able to get paid. So what I've heard from some of our companies, they're using this startup called Deal, which allows people now to be paid in crypto. So you know, the unintended consequences, a lot of innocent people, all innocent people in Ukraine that are affected by this, but people that have jobs in the US and are working on in tech and engineering can't get paid because they're not going to be able to get cleared through the banks in the Ukraine. And it's easy for everybody to say, well, let's just do financial penalties, but let's go look at the Russian market. I don't know how you pull it up, but like it's in fucking free fall. So, you know, it wasn't a big market cap anyway. Like the total market cap of like the Russian stock market is minuscule. But let's go look at their best company, Yandex, which is supposedly an incredible search engine. Imagine, you know, I don't understand what the market like a couple months ago wasn't pricing this in. So imagine this company, what's the market cap? 7 billion. Working for this company 10 years in Russia, equity is worthless. I mean, this is like, it's like a fourth world nation, Russia, with nuclear weapons. So I don't think people really understand the risk. You know, if their best company in Russia is a zero, which is their, you know, equivalent of Google meets Mercado Libre, you know what I mean? It's like their internet company.
Yeah.
I mean, it's just sad. Like that's not coming back ever. And what they're not allowing Russian sales of securities in Russia, like the Russian central bank tonight. So basically people are locked in. It's fourth world nation.
Yeah, some of the banks in Russia will probably go insolvent next week.
What do you mean? Like American banks?
No, banks in Russia. Yeah.
Yeah. So how did the financials hold in last week? I don't know.
I mean, they bounced with the rest of the market. So it's obviously looking better than tech.
Yeah.
And correlations are still very high. So everything bounced up, gap down on Thursday, and it was just straight line up.
How are you positioned going into this week?
In cash.
Okay. So you'll be trading from the long side into the open tomorrow, or
just depends where we open. I'm open to both sides as usual, and it will be just short-term trading for now. I mean, I was thinking that after the Thursday's big recovery, that there is a chance for like a maybe 5-6 days bounce, at least up until the 200-day here of the S&P 500. But after the headlines over the weekend, I'm not so sure that the market is fully ready for a continued bounce. Maybe we'll see more chop, if anything, in the next few days. Just a lot of headline driven market. You see those 2% gaps up and down, and it's kind of hard to swing trade with the size in this environment. I mean, yes, you can swing trade with like a minuscule amount, but then why bother?
I agree. You're better off helping your company do sales and catching up on work. So I think, cybersecurity, I think the banks or American banks are in strong position. You can trade against those lows, I guess.
Anything commodity related really is the strongest. XME at 10-year high, wow. All the metals, steel, copper, aluminum, probably, I mean,
agriculture stocks. Wow, Freeport
McMoran, out of Swift, probably we'll see some increase.
Where's Monsanto? Where's some of these seed companies in agriculture?
Monsanto was acquired by the German company Bayer, so it's not publicly traded anymore.
So Mosaic, give me a monthly on Mosaic. Give me
all the fertilizers are near multi-year high. Mosaic, CF, what was the Canadian one? NTR.
Yeah, we've been talking about these.
And then we have the Israeli one, I think ICI, I'm not sure. Something like this. But yeah, one of the strongest sector, like anything commodity related, super strong, and obviously oil stocks setting up again, definitely uptick in volatility in the past few days. And then all the upside gaps were kind of sold off, but they're holding. And they seem to want to go higher, especially the Canadian and US based ones. As it seems like that, you know, those countries will kind of try to pursue independence from, I don't know, oil imports. And this is where the strength is. Anything commodity related, tech had a big bounce, but if Fed is really worried about inflation, and it seems like the situation in Ukraine, as I said, is gonna make it worse, not only because of oil prices, energy prices, but also because of transportation, shipping prices. Like I've heard that Russia and Ukraine are like the major spots for a air transportation, and now that you cannot fly over those countries, the air shipping that is already 3 times higher than pre-COVID is probably gonna get even higher. This is the biggest company in the sector, I think, Atlas Air worldwide. So this is something to watch. But yeah, anything like marine shipping has been on fire, been extremely strong this year. MATX, I think, was the one. So ZIM. So all of them are near multi-year highs. So obviously, because shipping prices are up between 3 to 10 times. Like I read somewhere that pre-COVID it cost like $50, $30 to $50 to ship a fridge from Asia to West US, and now it costs 500. Like we're talking a humongous increase, which obviously will be reflected in prices and in buying in general.
But yeah, but much like, I mean, what you got to be careful of, much like the COVID tailwind, once and if these aren't growth companies, so once and if this all gets priced in, their next quarters become terrible. So, but these aren't true growth names, so you got to be careful.
Names, yeah, obviously, yeah, it's a
but very tradable.
Stocks, yeah,
growth is going to struggle. The dips in energy look like they'll get bought. The XL, I was seeing JC, the XLA versus XLK trade is in a huge, is it, well, it's turning, and it could be a long cycle, right? Like if all this money, rates are still low, so if money gets put to work, and valuations remain high in growth, a lot of money could still flow into, buy the dips in energy and commodities and metals. Like you said, there's a lot of money that has to still get put to work, but not my area of expertise. I think a key here will be what the Fed does. Do they pre-announce saying, hey, we want to raise rates, but during a war, when we've got all this pressures on the economy, we're not going to do anything. We'll see what kind of sell-offs we get. If we take out the lows very quickly on the Qs and on the spiders, the Fed will have to do something.
Maybe they'll slow down. Maybe this is why we saw tech kind of outperforming on Thursday and Friday, because that war situation at least means that maybe Fed is not going to raise by 50 basis points, but by only 25 basis points, and they'll be much slower. There'll be a much slower pace of raising. And then for the Fed, and then for the European Central Bank, maybe they're not going to do anything this year.
Because I think with the war in the background, people won't just rush back into growth stocks, even if the Fed isn't. So they may be able to try and voice. I mean, this is me just speculating, but they may, if they're worried about a recession caused by this war, this gives them cover. Because I don't think with a war going on, it's like you'd be nuts to rush back into tech stocks just because the Fed isn't going to do anything short term. So they may have some cover for a while. It doesn't really help clear up the picture. It just might put a floor into some of these tech stocks. There's no bid. There's really no bid in a lot of these. Even with the rally, a lot of these things are just so beaten up and broken.
There was a pretty decent bid on Thursday and Friday. The question
is, but I'm saying
the
90% drops in some of the 80-90% drops, what's 5%? So
I mean, yeah, you're right. Some of those names are definitely down between 50 to 80%. This is one, one can make the argument that maybe the worst has already been discounted, but then
I think, but at the same time, they're not cheap. They're still trading at 30, 40 times.
Yeah, absolutely.
Great earnings numbers.
Absolutely. And I mean, at this point, you can also argue that even if the Fed raises interest rates by a little bit, that should not make a big difference. And I don't think that's going to help inflation either, as it seems inflation is driven by other factors.
Well, it is. I mean, Phoenix has prices. I mean, people are paying crazy prices, in my opinion. You know, I like living in Phoenix, and I think stuff was undervalued for a very long time, but it caught up very quickly. And it's not like just, the summers are still damn hot, so you still got to have you got to have an escape plan for 3-4 months of the year for most people. So it's not, you know, it's not perfect. In Florida, as much as everybody's running to Florida, no taxes, it's pretty crowded already, and prices are going through the roof. So it's just not an easy market. This is as hard as I've seen in a while. And so for beginners out there who got in post, you know, April 2020, they are seeing some things all of a sudden. So so I think, you know, err on the side of caution and find some smart people to follow like Ivan. But it sounds like we're on the same page here. It's just not much to do. How are the semiconductors hold up?
They're holding a little bit better than the average tech stock.
Yeah.
So I mean, obviously there is still tremendous demand for chips, and it was interesting last Tuesday when the U.S. market reopened, and when Russia, you know, had already invaded Ukraine. At the time, we also saw a big gap down in Taiwanese stocks, as the market was kind of worried if something might happen there. So this is something else to keep an eye on. Since
oh yeah, that went from all-time high back, you know, down 30%.
This is TSM is the company that basically makes the chips for everyone, like Nvidia and Qualcomm and Apple. Like they're the actual manufacturer.
Yeah, that fell back into a big base. Go back to the weekly. Yeah, it's not easy out there. I think you got to stick with some index, trade the indexes here. The hack seems like if you must put money to work, it seems like diversify, not picking stocks, because there's going to be all kinds of pre-announcements with the war going on. We don't know who does business where.
Yeah,
so I
very high correlations, exactly. So yeah,
I would stick more to ETFs in a tough market like this. If you must trade to the long
if you're
side.
nimble, there's still plenty of opportunities. It just depends if this is your game. So it's definitely not for everyone. So you just need to know how to.
And if you look at China with K-Web, I mean, if you play out what happened in Russia, and if China does something in Taiwan, I mean, these things go to 10. This thing goes into the 20s, right?
It has already crashed. I mean, it's down what 70%. Like.
No, but I'm saying it's like Russia. You know, they'll get punished, and these things can go much lower. So, wow, it's really just incredible. Really, just an incredible bear market for growth managers.
Yeah, and the Dow is what? It's not even down 10%. Let's see from its.
No, because it's got diversity. You got metals.
8%.
You've got industrials. You have pharmaceuticals. But anyways, really, you know, the idea of these type of markets is to survive. For young people listening in, there's nothing wrong with being 50, 60% in cash and waiting till the all coast is clear. Obviously, you can find some great people and learn to trade other industries. But it's hard to be an expert in everything. But have a good week, Ivan. Thanks for doing this.
You too, Howard. See you next week.